Welcome to the Lucentlands podcast. We have identified the need for a platform where industry leaders and innovators in the agricultural sector can share their stories and inspire others. We hope you enjoy listening to this as much as we enjoyed speaking to these people. Welcome. Hello, Werner. Good morning.
Morning, Ewald.
Thanks for coming to chat to us about what you do. And we are very curious. And give a brief history is that we were at school together.
Correct, yes, many years ago.
Yeah,
previous millennium.
Many years ago. Yeah, previous millennium actually. And your father, Werner Opperman, is very well known, used to be the CEO of Agrarius Western Cape.
Correct, yes.
So, and that's a very nice, what you call anknopingspunt in English?
Yes, a point of interest and connection.
Yes. So, I think for the people that don't know you, just do a brief introduction of who you are and what we're going to drill down into what you do in a second.
Sure, happy. So my interest, I work in a world of we call it high finance. So if you guys know the commercials of Alan Gray, Sanlam, those things, I'm a fund manager. It's the exact same what I do. But my interest in the financial services world actually started in 1997. Due to my father's role at that point in time, the agricultural sector was deregularized. So previously, if you were producing something, government bought it and they would sell it on. So in 1997, it got deregularized and you had to enter the open market. So my father was involved in that process, and that involved what we call futures and forwards, derivative contracts. So he had to set up structures, and I could access to his books that he bought. That's why my interest in the world of high finance got peaked. And that's my interest started to get involved in fund management, asset management. So from there on, I went to university. I've got a BCom law degree, specialized in economics. Later, I got a master's degree in financial management, and I'm a Kaya chart holder. It's a specialist in alternative assets, so in non-traditional assets. And then I worked in the world of fund management. I manage money, your typical fixed income, JSE shares, US shares, global investments. But my interest was always in agriculture. So I always thought that agriculture is a brilliant investment, and we can go details why it's a good investment for the next phase. But no one else believed me. Or very few people believe that agriculture is a good investment, because most people outside the agriculture industry only see agriculture if there's a crisis. They see farm murders, they see droughts, they see something bad.
Yeah, the negative stuff.
Exactly. So there's a bias towards agriculture. So when I would speak to large pension funds, say, listen guys, we want to impact investing or we want to uplift the economy, I said, yes, agriculture is perfectly, it's too risky. We can't touch it. A lot of the fund mandates, global. So if you're a fund manager, you've got a mandate where you can invest. The default of most of them says no primary agriculture, that's cut off. So agriculture was always off limits as an investment class for institutional investors.
So, and like I said before, I'm going to ask a lot of questions.
Sure.
That's fine. So if you say the normal investment sector, that is like the Alan Grays.
Yes.
These, I'm just naming as an example. Mm-hmm. So I've got X amount of money. I go to them, I said, right, I want this money to invest to grow. They would not put that into agriculture. They would put it into like stocks.
Yes.
Or those kind of things.
Correct.
Okay.
So maybe I can give a very bigger picture first. So we talk about asset classes. Now, if you go to your financial advisor and you want a portfolio of assets, be it for savings for your children's education or for retirement, they would say there's 5 asset classes. They would say it's SA equity, offshore equity, property, and by property I mostly mean listed property. So shopping malls, the big shopping malls are owned by investment trusts. So that's the one. And then there's fixed income. It's like your bonds and then offshore fixed income. That's the 5 main asset classes that your person would have to invest in, the traditional asset classes. So my view is a little bit different. My argument is there's only 3 asset classes in the world. So the first asset class is a capital asset class, so capital assets. The second one is a consumable, transformable asset. And your third one is a store of value asset. So if we say, if we start with the capital asset. So a capital asset is something that you value based on a income stream. So if you think about it, if you invest in a company, you're basically your return as dividends the company pays. So you buy shares in the company, you get dividends from the profit. If I buy a bond, my return is the interest I receive. So that's your capital assets. So that's basically, if you go to a guy and says, I'm going to give you a diversified portfolio, I'm going to buy 40% equity and 60% bonds. It's a single medium risk portfolio. The problem with that scenario is there's no diversification. There's some diversification, but not optimal diversification. The reason being is, if I were to buy shares, let's say Edcon, so you all know Edgars, so many years ago, Edcon was listed. So I buy shares in Edcon now, so it's equity diversification on JSE, but I also buy Edcon fixed income bonds. If Edgars went belly up, like Edcon went, I would lose my assets and my equity plus my investment. I'm not diversified. So that's why there's a bit of a misnomer in what your investment universe are. It's quite limited. So most of our industry are investing in what we call vanilla assets, your listed equity. So it's a JSE and corporate debt in your firm bank. So that's it's the universe that can invest. So it's very, very limited what you can invest. Then you get what we call alternative asset classes. Then you enter the world of your hedge funds and private equity. And that's a new development sector. So hedge funds mostly invest in the JSE sector, but what I do differently from other investors is like your Alan Gray, we would call a value investor. That's a style of investment. So they would buy companies that are undervalued. So they would analyze the financial statements and say the company should be at 100 Rand a share based on the value of the company. It's currently at 60 Rand, we are buying because they expect to recover. That's your typical value investment strategy. Whereas
so they're taking a chance on that company.
Exactly. Everyone's taking a chance. It's all about risk reward.
Okay.
So it's a more conservative investment. The alternative to value investing is growth investing. So you're saying, listen, the company's current value is 100 Rand. It's currently trading 110 Rand. So the value guys is super expensive. But my forecast is these guys are going to win more contracts. They're growing very strongly. We expect the value to go to 140. So now we're buying. And that's where these different views on the share creates a market with people buying and selling. Now the hedge funds come in and say, okay, we think company A is overvalued. We're going to short them. That means we're going to sell their shares without owning the shares. So if the price drops, I'm going to make money. But once you sell something, you get cash. So I take that cash and we're going to buy the undervalued company. So my hedge funds are effectively getting a gearing in. So it's a different strategy to invest in.
But how can they sell a share if they don't have it?
It's part of the listed environment. You can borrow script. So you can own the shares. I come to you. I'm borrowing it from you, and I pay you a small rental for that, and then I sell it in the market. And that's shorting how it works. So
that's what happened. When was it 2 years ago with that whole big
short squeeze?
Yes, there was that whole thing that the hedge funds lost millions or billions of dollars.
Yeah, GameStop's one example,
Yes.
short squeezes,
Yes.
those kind of things. Exactly. Yeah. So that's your alternative asset strategy. And all this is trying to create a market. Basically, we're all just trying to buy something as cheap as possible and selling it as high as possible. That's all we're doing. Then there's different strategies around that. And that's our universe that we're going to operate in. So now, as a pension fund, where the most money comes from pension funds in the industry, and so a pension fund needs to comply with government regulations. The main one is Reg 28, and that defines how much to invest in SA and how much to invest offshore, and which asset classes, be it SA equity, be it SA fixed income. That's prescriptive, and a small allocation goes to alternative assets, be it your private equity funds, which you invest in directly into a company. So that can be investing into a typical product, like a AutoZone. That's like you can this private equity funds own AutoZone. So that's like companies you can invest in. So like previously, like McDonald's, the franchisees were invested in the private equity investment. So that's the unlisted investments you can make. But that mandate would say no primary agriculture. So that means there's very little capital going to the agricultural sector.
Okay.
Now, for me as an investor, it's all about supply and demand. If there's insufficient capital available, there's a mispricing. So there's a higher potential return to be able to be earned by investors by being a first mover into this agricultural world. And that's the opportunity we package into what we're doing in Agrarius.
Okay. So because there's nobody doing those kind of investments, you guys are the only ones targeting that sector.
So let's go from the farmer side. So we invest in the entire agricultural value chain, not just farming, but we use farming as easy to understand.
Yes.
So I'm a farmer, and let's just say I'm lucky, I inherited the farm. So now I've got a farm, but I need to do something on the farm. So the first thing is I need capital expenditure, so my long-term expenditure. So let's say I need to plant citrus orchards. As you all know, it's extremely expensive. And so you can prepare it now, start planting. It's 5-6 years before you get any income. So what you go to the bank and you ask for a bank for a long-term loan, like buying a house. It's a long-term loan. The bank said yes, but we will only give you, let's say, 60% of the value of the land. So I can use that money to do part of my development. But now that's used up. I've got no more access. Then your next form of capital would be a bank overdraft facility, but that's short term. It's 3 months to 6 months normally, and that's very strict. You have to pay it back very fast, very short. But that capital could include working capital, maybe some wages, some small items. So that's the one aspect. And then my other longer term expenses, like preparing for a harvest, my fertilizer, my pesticide, herbicides, I need trade credit. So that might be, let's say, for example, Nexus might be my supplier. They will give me some for the farmer some credit, and I'll go to the corporatie. And then the corporatie will also give you some credit. So from the cost perspective, where we play, we basically in the same word like corporatie, similar concept. So that's where we fit in the picture. But in this to the discussion, the farmer can also go to your other capital providers, which are more aggressive, and that's like unsecured port lending. But then it's quite expensive. You're talking 22% interest rates they pay. Some even more like 2% a month that they charge. That's normally your factoring. So that's a farmer's capital opportunity we set through. So what we do is we fit in with the corporatie side, but we provide sort of working capital, kind of trade finance to the agricultural community. But where your corporatie provides, you have to buy from corporatie. We say, listen, you can buy with everyone, and we're not competing with a corporatie, we're not competing with the banks. We see what's the unique need you need, and we do a customized solution for a farmer. So it works well, for example, with a bank. It says, this is one of our brilliant clients, we like them a lot, but he had an off-take agreement with, let's say, a large blue chip company. Due to load shedding, this guy's only taking the stuff a month, 2 months later now, but it's still secured, but we can't advance him because it's a limit. So we would come in and we'd say, listen, we'll step in now. We'll provide you the capital. The bank like it because now we pays off his short term for him, and we fit into that space. So it's a symbiotic financial solution for everyone in the agricultural space. That's our first different angle. The second different angle is our money is Sharia compliant. So a lot of our investors are from a Muslim community. So I would say about 2/3 are from a Muslim community. The other third is institutional guys who just like what we're doing. So what we do is we do Sharia compliant trade finance. The only difference, basically, well, if we put it in a nutshell, what is to be Sharia compliant? First of all, is transparency. So literally, we show our cost of capital, the client shows the profit they're making, so it's full transparency. It needs to have certainty. We can't do something it's unsure about. So I can't say maybe it's harvest or finance. There has to be a harvest. There has to be certainty in the contracts, and it's just to keep everyone honest.
Okay, so if you say certainty, if he says he's going to use it for his post-harvest, whatever, he must come back to you and say, look here, there's the slips. That's what I used it for.
Exactly, yeah. But it can't be like, listen, I'm going to buy that cow's calf if it hasn't been born yet, because it might be a dead. I can't finance it. The calf has been born first, and then I can finance you.
I see.
That's the kind of certainty.
Okay, and these investors, they are the people that are giving your company the money.
Yes, correct.
To be able to do this.
Sure. So what we do is we're not like lending money. We're actually engaging with businesses on a transaction. So it might be, let's say, a farmer needs fertilizer. I will go and buy the fertilizer. I would sell it I would add my profit margin to that. I would sell it to the farmer and say, you can pay me in 3 months' time and 6 months' time when your harvest comes through. So it's actually buying and selling products, which we're doing. Or I might say to the farmer, listen, you've got a harvest now coming online. Let's say it's called a salam. It's a forward contract. I say, listen, we can analyze your history. We know you're going to do, let's say, 100 tons of citrus. Here's the money now. Please, now, just deliver the citrus to me in 6 months' time. So that's and I let you buy it, and then we sell it. And that's what we do.
Okay.
Well, that's incredibly interesting and innovative.
So far, yeah.
So how long has Agrarius existed, and how are you guys doing? And are you South Africa only, or are you international as well?
So first one's easy. Our mandate is global. We can invest anywhere in the world because agriculture is not driven by a country. It's a global. You have to be...
Yes, indeed.
Place.
Everybody's going to eat.
Exactly, yeah. But also your pricing and the factors. It's like I'm not competing with the next farmer. I'm competing with a farmer in Spain from citrus. I'm competing with my market is America. My market is Russia. It's all over the world. I have to think global, all of the community. So you can invest global. We are biased towards South Africa. It's just because the area we operate in is where our investors are from, and it's always this bit of a red tape of exchange control to move over the country. But we are looking at transactions, like in Zimbabwe, looking at Botswana, Namibia, transactions in Mozambique we're looking for, and there's one of the transactions we're actually doing now in the Netherlands. So it's global we're operating in. So Agrarius has been going now for just over 2 years. So where it started off with is, as I mentioned, people don't like agriculture from the world. So it was hard to get people. I've been trying to convince people for the last 12 years to do it. And in 2021, the returns on the Sharia compliant investment instruments we could invest in was next to nothing. It was way below inflation. So internally, I got approval from the company's balance sheet to get 10 million to do one transaction. We did one transaction where we bought potatoes that was sold to Simba. We made significant returns for a company. I got an additional 100 million once the proof of concept to expand on that. So then we deploy that. And then end of last year, we listed a 10 billion note program with JSE. So it's a 10 billion program with JSE, and we issued the first 500 million. So we're currently deploying 500 million to agricultural value chain. So by the end of this year, we're going for 3 years now.
That's incredible. Wow.
Yeah, and the plan is to come to market every 3 to 4 months to raise more capital for more investors and deploy the capital to the sector.
Okay, so one of the main questions I've had is that, okay, so, and this is because I don't know, is that in your case, right, I come to you and I say, right, I need to get my citrus crop off, or whatever it is, wheat or stud cows or whatever the story is. I need to get this thing prepared and get it ready for market, and it's valued at, let's say, R1,000,000. Make it simple. You say, okay, right, look at the stuff. Okay, right, I can give you the R1,000,000, but then you've got to pay me back 1.1 million. Am I correct in saying that?
Yes. Yeah.
Okay. What happens if my crop is a failure and the money's gone?
Okay. So what we do is we do a project-based approach. So what we say is, I'm not looking at your farmers like a typical, your land is my asset. My asset is the crop. So we would analyze what's the risk on the crop. So we would advance between 20 to 60% on the crop, depending on where it's the cycle. If it's like early stage, let's say it's your citrus 90 days before harvest, and it's in an area with no hail, so it's like air hail is quite risky, but it's like a low risk environment, then we can do advance 20% to you, because the chance, if something happens, the chance of you losing more than 20% or more than 80% of your harvest is quite low. So the harvest would be our primary security.
But you're saying that that losing 80% of your harvest, that's while it's still on a tree.
Correct. So
but what happens now if everything is done right, and like what we've struggled with the last 2 seasons is logistics and phytosanitary and all those things, and you then lose. So you don't get the income. You just don't get the money back.
I'll get to that point. So if it's further down the chain, let's say it's packed citrus on a harp now going out, then we can advance up to 60%. So there's still about a 40% buffer based on expected sales price in the market. So we do a lot of modeling on that sales side. So when we get involved, we've managed all these risks, and the chance of happening is extremely small. So that's what our primary collateral is focusing on. That's what our main focus. But then what we always do is always look for a backup plan if something goes wrong. And our backup plan would be another harvest. You would find a guy that still have citrus. He might have some other operations. So we detect other harvest. Let's say it's potatoes, but we also have a boinkies. Then we take a decision on the boinkies as well. So then the boinkies is our backup. So that's the scenario we will do in that case. And as a fallback, we'll look at other physical assets on that. Or otherwise, we'll look at within the framework we can do. We might just able to roll to the next season, because a lot of it, because it's a long season. Let's say the season starts February side and ends by December. So we'll probably get the last part of capital back, but if there's small amounts, it's still outstanding because we couldn't get full harvest. We just work it out to the next harvest. And there's contacts from that in place. So that's what I might work.
But the long and short is he's going to have to pay the money back.
No, there's not free money. No. My management, I have to protect my investors' capital and I have to get in return. It's not free money.
But in general, let's say we come to you now and says, Werner, we are not particularly agriculture, but we work in agriculture. We need to expand our business by gear or whatever, and we give you a business plan and say we need X.
Yes.
And if that business, I'm just using us as, not that I'm asking you for money, but but if you now go and like I like watching Dragon's Den, and the people come and they pitch, and then what happens if that business goes bankrupt? Do they still owe that investor the money back, or?
So in that case, it's a worst case scenario. So we only get involved in businesses where there's little bit of risk. So we won't come to a distressed business. So once again, small things will happen, but if it happens, there's normally some assets that goes to a typical bank liquidation process, or a bank like in business liquidation process, and then we stand in line with other creditors, depending on how we structure the transactions. But we try to have we try to be at least first rank of some things. We try to ring fence like the harvest, because we buy our property, it's ring fence. So long as the harvest comes off, we'll get our money back. The race business fails, we still first line with harvest. But if the harvest was also gone and a full business collapse, then we look at the bank business being liquidated. There's
Yes.
part of that line, and that's just the reality. That's what we price in our return profile. So if we do 100 investments, yes, 1 or 2 will fail, but the profit we make on other investments would cover for that failure.
I see.
So that's how we spread our risk.
Okay, and when you say, like, we keep talking about citrus harvest, but let's say a crop, if you say you own that crop, it's still, the farmer still uses his own marketers, his own exporters. Does the money come to you first, or does the money come to him and he then pay you? Or
So we're flexible. So what we typically do is we try to work, unless the large farmers, we work via exporters. So we go to let's say it's a citrus exporter, we will go to the exporter and we say, guys, we know currently the situation or the farmers are cash strapped. We know if the cost of shipping is quite increased, we know it's a cash flow crunch. What we can do is we can bring your capital. You will basically then be able to pay the farmer, let's say, a vanilla product, advance as he delivers. Once the fruit arrives at the harbor, you can pay him 60% immediately. That's advance. So what that case happens is we agree on a purchase price, we purchased it, it becomes our property, and then what we then can do is we can sell to the export company, almost like a day later, it sells to the export company, and agreed on profit. He goes and exports it, and then if he makes a profit on that, all of that profit comes to the export company. And those export companies normally have a contract in place with the farmer, whereas any surplus gets paid to the farmer. They take their commission and they pay to the farmer. So it's like it's our crop, we agree on a profit rate, but we cap our upside. And then any upside over and above goes to the farmer or the export agency.
okay,
The way you outlined the financing of the agricultural sector, how a farmer would finance his operation, you did a very good job of that. And I was involved with farming in my past before, so I know about that. And I think the gap that you are providing in the market is a very positive, and it could be very, very beneficial for farmers to have that, because when you're there and you need that cash flow, it's like a crop loan in a way. But if you're saying you will also buy the actual stuff from them and sell it, actually, it also means that you've got quite a diverse offering. It's not just the funding. You're
Correct.
actually providing a service as well.
Yeah.
So that's very cool.
okay. So now I grow my crop. I say, Werner, right, I need 10 million or whatever amount. You said, right, we buy it from you for 10 million. You know, we can sell it for whatever profit we make. Am I correct?
No, so we buy it becomes our profit.
Yeah.
And obviously we can, you're not going to sell to your friend for 5 million, probably 5 million. So
Yes.
there's very strict rules around it. So we buy it. There's normally when you get involved, there's already off-takers in place. So it might be like a PepsiCo, it might be a Tiger Brands, or it might be a Tesco in the UK buying it.
Yes.
So it goes to the same channel. So we just fit in existing channels, or we go to exporters who've got channels for more fruit, but I've got the farmers can supply us the cash. So then we put in. So we get our exporter to optimize these channels. Other example would be a processing unit. So this make a simple example. The mango prices drops towards December, January. Everyone
Yes.
comes back from Mozambique from a vacation, and they come production, the mango price drops. So the mango processing plants will be an advantage. They have the capital available to buy this cheap mangoes now, put it in cold storage, and then draw it every month or every week, dry it and sell it. So in this case, if it works, it brings expansion capital to existing operations. So first of all, now they get more raw material in. They're operational at 100% for an entire year. So it's growth capital we bring for them. So it's not just like a crop, it's like working capital for businesses we bring to them.
Okay. It's fascinating, but I'm just so curious because I just don't know how it works.
Yeah, but what you're saying is I understand enough about this to understand what you're offering could be extremely valuable to growers, to any kind of farming, and whether it be domestic, just doing stuff in South Africa, and internationally, because so often farmers they've got everything in place, but they're just cash strapped to actually prepare the harvest and get it off.
Correct.
So to be providing them with that, I think you're onto something very, very good there. And you're saying that your company has really, really grown.
So yeah, size-wise, it's grown at absolute rates. But remember, this is part of a bigger operation.
Yeah.
So 27.4 manages about $120 billion across different product solutions.
27.4 is Agrarius is below that, part of it.
Yes, exactly. So 27.4 is a financial services company. So we're diverse. So we are First of all, we've got a platform business. So if you're a pension fund, we can set up a pension fund for you. If let's say you're a small company of 100 employees, you want a pension fund, we can do the entire pension fund legal framework for you. If you're an institutional investor and you want an investment vehicle, set up a fund, be it via a life policy or via a collective investment scheme, we can do it for you as well on our platform side. Then we are just like Alexander Forbes, Towers Watson, or Secura. We're investment consultants, like typical actuarial work. We do the exact same there. And then we are fund managers. We've got a range of financial products. So Agrarius sits in the financial side. So we're the agricultural division within 2004. So we've got a massive backing behind us.
Okay, wonderful. Thanks for explaining that. All right. And the Sharia law, that's a very interesting thing. When we considered this, when we considered interviewing you, I went and Googled your name and I found somebody interviewing you specifically about the Sharia law thing. That's interesting. How's that going? And is it is that really assisting you with your Muslim clientele?
So maybe I put it in context first.
Yes, please.
So if we look at South African legal framework,
Yes.
our basis is Roman Dutch law.
Yes.
And literally our contracts, like it's empty and it's our purchase contracts, are based on legal frameworks from 2 years ago, from the Roman period. So that's
Yes.
where it comes from. Then our commercial side developed later with the English getting involved. So that's our framework. But that's in this particular context, people always joke about Americans with their silly lawsuits. So in our world, we're a bit more prescriptive. Well, we do. Americans say, listen, do whatever you want, but if you mess up, we're going to come after you. So people always say that McDonald's coffee, for example, the person got burned, but they say, but you should have known it's warm. But what people don't know is, of course, McDonald's want to be efficient. That coffee is way over 100 degrees Celsius. Because to make it fast, it's under pressure, so there's no gas escaping. So the cup of coffee was extremely warm. That's why a person got burned and just got sued. That's a work for a different legal framework.
Yes.
So people tend to forget is that we only focus on the Western world from our concept. But the Islamic world were a very vibrant trading economy for almost 600 years now. There was mostly trading happening between the Middle East and the Far East, like Asia, China, we're exporting out. So that existing legal framework contracts are in existence. So we're just taking like MTM, which is Roman one, we're taking the Sharia contracts, which has been designed for trading, because Islamic world is built on trading. We're using existing contracts, which is ideal for what we do, and adapt them to the South African framework. So we've got literally South Africa, your typical Afrikaans farmer, got a big car of short pants, entering into a Moraba contract or Islam contract, because literally it's not that complex. We just explain all the steps, they understand it, and they're happy to it. It's more clearer than our typical commercial contracts. And that's why it
well,
works.
thank you for that very, very good explanation, because if you don't know, you don't understand. And it's really great that you can break it down for us so that we can understand that. Because that's unusual.
But if you I'm playing devil's advocate here now, you get these stoere boere, NG Kerk people, now you're coming to them with a Muslim contract. I'm sure there must have been some questions asked on.
So far, we've only had one case where people didn't want to do it on Sharia principles, but it wasn't the NG Kerk, it was a different Eastern religion.
Yeah, no,
that wasn't why they want to do it.
In South Africa, if you talk about
Correct.
the very conservative, you talk about the NG Kerk kind of thing.
But remember, the Sharia world we work with are also more conservative people. So Sharia basically is also more conservative. So we've got two conservative groupings that have some principles. They're just because of stereotypes, they don't talk to each other.
Yeah.
Once you start talking, it's perfect.
Exactly.
What people tend to forget is Afrikaans was first written in Arabic in Cape Town. So the first Afrikaans words were written in Arabic text.
Yes, you're right.
So there's actually a very long history between the Afrikaners and the Muslim community.
Yes, you're right.
So it works.
Interesting.
There is a whole wormhole there about Cape Town's early history and the early history of Afrikaans and how it's evolved since then, and sometimes people forget those early beginnings. So that's very interesting. Okay, so you are here and you are busy working for Agrarius and it's getting on. And what would you like to tell people that are listening to our podcast about how can they contact your company and how can your company be of benefit to them?
What
interesting things are you working on at the moment?
Yes, go there first, please.
So I would say in a nutshell, what's Agrarius' vision is what we want to do is we want to transform the agricultural industry globally from an extractive economy to a circular economy. So we're looking for projects where we can entice the circular economy to get going. So that's what we want our main objective we want to achieve forward.
So I couldn't hear you too. What kind of economy?
Circular economy. Circular economy.
Circular.
Yes.
Sorry. Okay.
So it's more like efficiency. So there's different examples. The typical example would be that's not very basic. Is you don't buy a drill, you buy holes. So if you buy a drill now, you waste capital. How can we share a drill with more people? That's one example of circular economy. It's we can do it all the down way. Let's say look at the slaughtering environment, where people are literally using the blood from animals. They're growing flies with it, fly larvae, feeding it to fish. So it's all that circular thing. How we can make it work.
Okay, I'm with you.
It's more about. It's not like the fluffy green stuff. It's the hard green stuff that's enhances efficiency.
Yes,
That's what we're after. So that's what we want to achieve. So we help with that capital, bring it through markets. What are we looking for? So basically, because the analysis is quite intense, it takes a lot of man hours. We prefer not to do deals less than 5 million. And that's normally just like if there's potential to increase it to higher. So our deal transaction size is between 20 to 50 million. We will start small and see if it can grow. But let's say we start off like at 20 million, then at 50 million, then we can move to 100 to 200 million over time. So that's what we look for. We're looking for anything in the agricultural value chain. And that's broad. So it's from the components of fertilizer.
That's big. That's huge.
All the way to recycling and everything it touches on it. So it's also importing. So we're looking to import stuff that goes to Woolworths now. So finding an import for fine Woolworths. So it's all the way through. And we can also look at some technology stuff. We can also look at the aspects around leasing of instruments. So like one of the big things we're looking at now is renewable energy, because the farmers have solar panels in place, but Eskom fixing, they need batteries now. So maybe we can help with the batteries coming in. Or you've got a pack line, you want to increase your pack line's efficiency, you want to install these high fancy camera sorting things, that's like 5 million. But given the last year bad harvest, you can't afford it. But if you put it 5 million in now, your harvest, your yield will increase.
It's going to increase things going forward.
So that's the kind of things we can look at as well. It's like a 12-month, 24-month financing of those instruments. So that's the kind of things we can look at. Interestingly, it's difficult to mention names, but let's talk like the ostrich industry. People understand that 90% of ostrich leather in the country comes from SA, or globally used comes from South Africa. So all your Prada bags, your Louis Vuitton bags, it's from South Africa. It's from small towns in South Africa going to the world, extreme luxury products. That's the projects we're working on to provide capital. So the ostrich industry is recovering. So if we can get more capital in the ostrich industry, it will grow more job creation. So what we're literally doing is, from our perspective, we're raising capital from the JSE and having it flowing to small rural parts all across the country.
That's incredible. That's incredible, because the rural areas in our country really, really need that. So it's good to hear that in an industry like that is benefiting from what you're doing. And I mean, it can work for everybody in the agricultural sector.
Correct.
Do you have a lot of people knocking on your doors?
We have a lot of people knocking on our doors. We take calls from anyone, so we're open to discussions. Because if I do deals, I might know someone can help you, or say upfront, listen, what we try to do is we try to have our turnaround time in 1 month. So from engagement to payout within 1 month. Normally, what causes delays is the analysis part, so the data we collect. If you've got a strong accounting team and you've got earnings up to date, then it's easier. But unfortunately, a lot of the farmers have legacy issues. It's like multiple trusts, multiple companies. That takes time for us to analyze. That can cause a delay. And then sometimes the contracting side, because we use large legal firms. You probably those guys also use large legal firms, and the lawyers start talking. Quickly, 2-3 weeks is gone. So our goal is to be turn around in 1 month turnaround time.
Wow, that's also phenomenal, because very often time is money, and the people need to get the money in. They need it fast.
Correct.
Because if you're on Facebook, on these agricultural groups, or LinkedIn, or wherever, there's a heap of young people, and if we can say it, young black people, who's all looking for investment for this big thing. And be it what it might be, a chicken farm, it might be a vegetable farm. Are those the kind of people you're looking for, or is the risk too high? Or
those ones difficult for us to do, because there's almost no track record. So we can't trust it because our track record in the first place. And they're also extremely small. So what we normally try to do in that case is, how we do impact investing is, we would partner with, let's say, a large commercial farmer and say, look, guys, we're going to keep this capital, but remember, we're an impact fund. There's some criteria. So there's a green criteria you have to apply to, but we can also do social criteria. So listen, we will finance your butternut harvest for you. Yes. One condition is, there's a guy next door to you, a small emerging farmer. We want you to employ him now to do the harvest on your behalf. So first of all,
or buy his product.
We'll get that one. So what we do is say, first of all, we'll finance it, but you can't harvest it. You have to hire this guy to do the harvesting for you. That means there's a bit of a skill transfer, but small guy normally only have enough capital for one harvest. When plants, nothing happens else. There's more capital going to him now from his income and earnings, so he becomes more stable. So that's the first one. Secondly, when the guys come from Nexus, whoever comes to you to your investigations for your programs, please have them stop him as well and inspect his harvest as well. And if you need all the stuff for instance as well, add it to your freight. So all of a sudden now that small farmer's cost becomes less. That's the one angle we do to it. And yes, when he goes to market, take his stuff with you to market. So that fits in as well. Other ones we're looking at, for example, would be, let's say we work with abattoir. So we provide capital for their slaughtering. They will supply to your butcheries. We say, guys, what we can do is the small butcheries in the townships, which you're already supplying, we can help you to give them with better credit terms. So we don't give credit, but we can say, you normally would say you have to pay us in 1 month's time. If you supply to these guys, you can get 2 months to pay us back. And that's how we can make it work to get a small businesses indirectly support. It's just because if you think about our contracting expenses, it's easily 500,000 to R1 million, our legal bill for a transaction. So that's why it's difficult to do small transactions.
Yes. So is this what you've described, is it happening quite a bit?
It's happening a lot, yeah. So we've rolling out now. So we've got a few of those happening. It's happening in the for example, we used the mango one. So immediately employed more people. You could buy them from smaller farmers. So that's the first one. We're looking at our abattoir ones where we're supplying to the townships. Well, it's a different model. So that you've got the prime cuts being exported. Then you've got your processed meat going to Burger King and McDonald's, and then you've got your slaghuizen, your butcheries goes to, and a portion goes to the townships or your boxer stores. So that's where we're selling for giving the terms. So that's how we try to get impact to the smaller guys.
Very interesting. Very interesting. And I'm sure there must be a lot of people that are interested in this. And it's a way of helping. Yes. It's a way of mentorship and assisting. So it gives people, because mentorship in the agricultural sector, everybody wants it, but it's expensive for the mentor. So if you could be helping the mentor, they can help the other person.
Correct.
Is there success stories where you can name the companies that has come through this ranks?
Most of our guys are still large commercial ones, so they're already established, and this help to expand them. So I don't know if I can mention names because we're on NDAs.
Okay.
But what we will be doing is on our social media. We'll be publishing success stories in the near future. There's multiple steps for us. So there's first the client confidentiality, he needs to prove it. But then because we list it, there's additional oversight we have to do as well. So you need to get, like, let's say, compliance or JSC just says, I'm going to announce this. Are you happy with it? So we're just careful what we are doing. But mostly so far we've had successes. Literally we say we're a growth fund. Well, first of all, we're an impact fund, we're also a growth fund, both figuratively, so we're helping companies grow, but also literally because we're investing in growing assets.
Yes.
So our main clientele are guys that have a pipeline to expand, but need a capital, and the capital building is help to expand. So that's, so I can't have any specific success stories yet.
Okay. So we've known each other for a long time. We've had some dealings after school, but not a lot. So it's good now. I know more now. But if you go to a function or a braai or whatever, and you're standing around a fire and people ask you, what do you do? What do you say then? Because now this is quite a mouthful of all the stuff.
Elevator pitch, basically.
Yes.
Yeah, to explain. But I'm easy. I can say, well, I take photos.
Yes.
And Louise can say, well, she's a writer. But what do you say?
So I normally, depends on the audience, you have to see what their framework of reference is. But most I tell guys, I'm a stockbroker. Because people have no idea what stockbroking is. They think of buying and selling shares. So I'm not really a stockbroker in my world, but I'm a stockbroker. I'm buying and selling listed instruments. And I said, okay, but there's actually small tweaks. I actually manage money by allocating to other funds or allocating to stock to shares. But then there's one step further. I'm actually one of the guys doing the actual investments on the ground. So that's why I just explain, I'm a stockbroker, or think of me as your actuarial consultant. People have no idea what actuary does.
But when you started going down this rabbit hole, and because I know you were involved with quite a few of these organizations, and like you said, everybody's kicking against agriculture. How did this small crack open up to get through?
Sure. So I think it's probably a benefit of COVID. There's a few reasons. So first of all, the interest rates dropped significantly. So all of a sudden now, let's say I'm a normal fund manager. My mandate is to outperform CPI plus 3. The equity market, we're looking a bit dicey. Not going to get my CPI. My fixed income instruments, my government bonds, or my other bank paper were giving me like 4 or 5%. My inflation was pushing 6, 7%. So I know I'm going to miss my mandate. Now I'm forced to think of it differently. looking for other stuff. So what I can bring is, I said, guys, I'm offering you a higher yield, so that piqued the interest. So now people's got interest to
obviously.
it. But then at the same time, people started realizing with COVID, supply chains collapsing. They saw empty shelves. They saw shortages developing. And they all realized, but this agriculture is quite important for us. So I have to get involved, not just because of the return I can get, but for the society as a whole, it's important. So now, from that side, agriculture is becoming a bit more topical now. So there's more interest now. And people were also realizing, we assumed agriculture was very risky, but we invested in safe businesses that got destroyed in COVID.
Yes.
So now, maybe I was wrong in my biasness against agriculture. What I thought was safe was actually not safe.
Yeah.
So now people's risk appetite has also changed a bit more.
Very interesting that COVID has been such a shake-up in so many ways. And things like suddenly realizing that the agricultural sector is actually the star of the show, that it kept feeding our country through the whole COVID time, because people were plowing away at the agriculture, doing it, getting on with it. And suddenly, as you say, eyes focused, suddenly other stars didn't have the luster that they had previously. And suddenly people were realizing that the agricultural sector is actually really what has been driving South Africa. It's the rock star sector of South Africa,
Correct.
actually.
Yes.
And it's good to see that people that never wanted to look at it before are looking at it now. So that's very cool to hear.
Yeah, so it's picking up.
Fantastic.
Sure.
Okay.
No.
And so looking forward, what is Agrarius thinking? Where are you thinking of going? How are you planning to grow this? What do you guys, how do you see the future?
I've got a question connecting to that, but you.
Okay.
Yeah.
So the first thing is, we're still doing amazing stuff. It's raising capital, deploying capital, and getting capital back and paying our coupon. That's our main objective for next year. And the plan is we continue building our pipeline, continue engaging with agricultural businesses, building out our basic contracts, getting contracts with more user-friendly. So that's because it develops with time, especially now we've got getting, like you mentioned before, we've got Inkrika guys and Sharia guys talking the same language now. So that's the big focus we're doing on. And then what we're doing is we'll continue our capital raising on a global level. So we'll go to Europe to engage with those companies who are interested in that. We're going to the Middle East because they also need food security. Now you can invest in a company that actually exports to your country. So that's what we're going to be pushing forward. And then we're going to be continuing called flag and flag agriculture. That's our main focus.
Wow.
And
fantastic.
The question I've got is, okay, we've only been talking about people that will need money, but what about people that's got money that want to? How do you? Because there's growers worldwide, not just South Africa, that has got a lot of money, and it's a fact. How can somebody that's a mega grower, producer, get involved in this? Can he find you, says, Werner, I want to give you 10 million rand?
Sort of. So you can call me, but then I'll tell him, yes, this is what you do. We've got two options. If it's more than 10 million, let's say it's like 50 to 100 million, we can do a bespoke investment for you. We can develop an investment program and invest in just something that you want, like a bespoke agricultural theme. Or if you want a generic solution, you buy it via your stockbroker. And it's literally, you can call it FNB, talk to your FNB stockbroker, and you can buy our instruments as listed on JSE. So it's the whole idea. We literally want to create investment vehicles for people, for man the street to invest in agriculture. Okay. And that's literally by your stockbroker.
But if you find your stockbroker says, I want to invest 1,000 rand a month into Agrarius, I can do that.
You can do it. There's just two angles around it. So the JSE has two components. There's a JSE share market, which you all know, and then there's something that used to be the B side, the bond market. So we listed on the bond market that was bought by a JSE a few years ago. So to be a member of the JSE, you need to have a large balance sheet and a lot of exams. So that's what the stockbroking firms do to counterparties. So I'm always trying to think of it. People in the legal world, you can't just go to the court. You have to go via attorney and via advocate. So you can't just buy our instruments. You have to go via a stockbroker. It fulfills the same function, but not all attorneys can go to court. You need to have special qualifications. So not all stockbrokers can trade on the debt markets, the bond market. There's only a handful, but it's mostly the big banks. So all the banks are your FNB is your standard banks that you can trade them, and then your specialist stockbrokers like Perisec, your large institutional stockbrokers can do that. So you can just give them a call. We've got a ticker for ASAs, like a typical share code. Our share code is Agri A1. So that's our share code. It's available on JSE. You talk to your stockbroker. If he's allowed to take the market, he can literally buy and sell stuff for you. It's as simple as that. The only catch currently is there's more people willing to buy than to sell. So currently there's a shortage of instruments available. I know I've got about a pipeline of about 20 million rand of people looking to invest, and there's just no one to sell at the moment.
Okay. And for somebody that wants to invest with you, what kind of returns could they be looking at?
So it's market linked. So how it works is we come to market and people bid for instruments, and depending on if more people bid, lower rate. If less people bid, higher rate. So currently our rate is we call JIBAR plus 4.75%. So your JIBAR rate is similar to your prime rate. So your prime rate is what if you lend from a bank. JIBAR is what banks lend to each other. So the current JIBAR rate is about 7.45%. So our current yield is 12.22% for this month. And every month it resets. If the JIBAR, if the SARC comes on a TV and announces higher rates, our rates will increase. If they announce lower, ours will decrease as well. So it fluctuates. So currently it's about 12.2%.
But in general, it's about, what do you say, about 5% more than what?
It's JIBAR, 3 months JIBAR plus 4.75%. That was the coupon was struck on that.
Okay.
So if you just look at JIBAR, it's 7.45% plus 4.75%.
Okay.
So it's about 12% return at the moment.
Okay. Interesting.
Extremely interesting. And I think we know a lot of people that would seriously benefit from what you're offering. And the best of luck with it. I think it's really nice to hear the confidence that you guys have in the agricultural sector. When, as you say, most other people go, no, agriculture is too complicated. Yeah. There's always some drama. There's always, when you only hear about agriculture when things go badly. But actually when things are going well, it does extremely well. And it employs such a huge amount of people.
Yes. Yeah. So I've been in the investment industry about 16 years, and I've worked on many non-agricultural projects where things goes wrong as well. So things goes wrong all over the place. Yeah. It's just not always well marketed when things go wrong. So we've all heard about the big blow-ups in JSE or the Enron sagas. It happens everywhere. But agriculture has a bit of a negative bias towards that.
Yes. Do you have any other questions?
Yeah, well, I can sit and talk about this for a long time because it's interesting.
It is extremely interesting.
Yeah.
So, do you have a typical client?
I would say typical client.
I mean, what like if you were to go and look at the sectors, the people that are investing with you, the people that are speaking to you.
Okay, let's change that.
You said you had a question.
No, I've asked that, but to make it more direct, which parts of the agri sector would you like to get more involved in?
Okay. So I would say we try to build a diverse portfolio. So we want much exposure all across the board.
Yes.
So one I would like to get involved in, but currently we can't, is your summer or winter grains, just because the risk is so high. It's extremely round. We can't get involved at the moment. That's one we'll see if we have a plan. That's one.
Is it just because the risk is too high that you can't?
It's just too high. It's if you look at a typical Saaiboer, he's normally currently now quite highly geared. His assets are marginal, so it's the real assets, and his harvest depends on if there's rain or not rain.
Entirely on the heavens.
Nature. Exactly. So that's extremely. So we can probably start looking towards the guys doing irrigation, like Spulpunter. So those guys probably can look at that, but there's still quite significant risk on that sector.
Yes, I know that because we do a lot of work with Agrarius. Is that I know that Valley has got a partnership with a bank, as well as Agrarius has got a partnership with I can't remember exactly which bank it is, but if you want to put up an Agrarius pivot, you say, I need X amount, and then they will fund it via that bank.
Correct. Yeah, we can do the same. Exactly what we do. Okay. So that's guys we look at, but then also what we're trying to do is, instead of you selling on Safex, maybe we can sell, you can get a miller close by. We'll take it from you. That means you can save on transport costs. It's more environmentally friendly, and it's better for everyone. So that's the kind of things that we'd like to do in that space. So that's what we'll play out. Our other couple of clients, I think the guys probably has a need now would be the citrus guys. So we've got some capacity for citrus, guys looking for citrus funding. And guys now, like you mentioned, apples and pears coming online. There's probably going to be a need there. Yeah. And then also
the grapes.
Grapes, yeah, they probably as well. And then also, don't forget packaging material. Because it's quite expensive. Yes. And what we did discuss with guys last year, because if you can pay in advance, so we can buy your capital to pay in advance, you get like a massive discount, like 18% discount and certainty. So that's the kind of things what we would engage if we're looking for that. But otherwise, we are not like a bank. It's not like a default product. Come with us what your needs are and we'll still make a plan.
Okay. That's in. I can just think of a whole heap of things.
Lots of things, and lots of people that we know, and but we can't really go down the road of mention names. But I think there's.
But out of curiosity, okay. So I had a discussion. Not a discussion, it was something that popped up in my Facebook with a grower down in the Eastern Cape, but they grow vegetables. So he says and he was growing Brussels sprouts, high intensity Brussels sprouts, and he produced 165 tons, and he got 8 rand a kilo, between 8 and 9 rand a kilo for his product. Now it goes to big supermarkets.
Yes. Yeah.
There's only a few of them, and they sell it at 115 rand a kilo on the shelves to the Joe So. I don't know if this, I'm just curious. Is there a way that you guys have maybe thought that we can get, especially with vegetable growers, to get it more direct access so that the general public can buy more direct? Because the main supermarkets, they're coming with this thing is that we've got a cold chain, which often doesn't work. And now with load shedding, it really doesn't. If you go into our supermarkets, the produce is up to crap. They've got storage and logistics and the footprint and all the bank shoot. Is there anything that how we can get these guys to market directly? So have you thought about that?
Yeah, we've thought of it. We're actually engaging some of the guys supplying to the supermarkets. So it's like big warehouses or distributors and buy from the farmers for some contacts they have to the supermarkets with those ones. People also just remember, you get 8 rand for a cabbage, you deliver 100. By the time it reaches the supermarket, 20 has been just damaged or destroyed. So there's also quite a loss factor as well. So that which also be recouped from supermarkets. But yes, the pricing there's a big mismatch between what the consumer pays and what the farmer gets. So we are looking at the direct options, but it's quite difficult because the actual distribution is intense. So during COVID, there was a company called Terra Madre, they Grobo.
Oh yeah, I've met them.
Yeah, that's a brilliant concept. So they started the process. So they got somebody they're initially all over the Western Cape, the metropolitan, but it also reduced.
There was a girl that made it.
Exactly.
I've been there. Remember that photo I've got with the girl holding the eggplant or the
yes.
Yeah.
That's a brilliant solution.
They had a fantastic cider as well that they produced.
Yeah, ciders, they do also peregrine pies. Because
correct. Yes.
So what they did is they had like twice a week, someone come to Cape Town and then we distribute from there or from someone else's warehouse. So that was one model, but it's a very niche market.
Yes.
So that's what you do.
It's focused towards the affluent user.
Exactly. Yeah. So that's the affluent user mostly. And to scale that becomes difficult.
Yes.
So if you think about a logistic change that at a typical Woolworths, just so my place is Sea Point, I look out in the Woolworths, there's trucks coming from 5 o'clock in the morning delivering. And it's almost like I can't just have one truck with everything because of rules. I have to one truck for milk, one truck for meat, one truck for fruit.
Yes.
So the logistics is the biggest nightmare for the farmer to have access to it. And the consumer will probably not be better off if you have to incorporate that pricing.
Yes, I've
and this is a global problem. Sorry, this is a global issue. It's not just here. It's everywhere in the world. What the farmer actually gets back in his pocket after the whole supply chain is paid out and the consumer has bought it is a very small part of what the final cost is. It's how it is. And if to change that, you'd have to completely revolutionize the whole supply chain in order to achieve that. But it's interesting how farmers markets have become a lot more supported,
yes.
And a farmers market is almost like a leisure activity. You go there to walk along and to browse.
And you're going there, you know you're going to be spending money.
Yes, and
you don't go there with an empty wallet.
You're actually going there for leisure in a way, and you're buying some nice stuff while you're there. It's not like going to supermarkets; completely different environment.
Okay, so one thing that we're looking at, but it's like a few years down the line, is need this data. So big data is becoming more popular now, but it's not available yet. So what you can start looking at is looking at buyer patterns in the city, and you can see which days of the year people are buying, let's say, tomatoes or buying something else. So you can start optimizing your farming supply chain. So which farming area would have the highest potential yield, most efficiently produced, the most cost-effective way to service that specific week in that city, and linking it back to it. That's the only way you can get the direct way.
How are you going to get that data?
So we've got some projects we're working on, but it's as I say, it's quite long because it's data mining.
Yes.
It's first collecting and then data mining. So that's the only way you can get probably directly going. So I'll get to the solution would be almost like a ghost. You guys know what a ghost kitchen is?
No.
I've heard the term before somewhere, but I've got no idea.
Okay. So in the city now, if you go on your phone, you order Uber Eats.
Okay.
Yeah.
They don't necessarily go to the closest KFC. There's I call it fast food restaurants in buildings with no logos on it. That kitchen makes a McDonald's and a KFC burger.
Oh.
So the Uber guy arrives there and he just picks it up, so they know everything, and it gets delivered to you. You think it maybe goes KFC has delivered it. That's not how it actually works. So what you can do with this data now is if you can get like the central unbranded warehouse, so you might buy from Woolworths, but that same warehouse or shop supplies Pick and Pay and Checkers. It just gets put in this Woolworths bag. So it's the same going through there, but then if you know which area is going to be demanding it, so you link it to that. So that, but that's once it gets 3 to 5 years down the line. Just a lot of data.
But will those be private individuals that set up those all the distribution?
It will be large corporations doing that.
Okay, so Checkers and Pick and Pay and Woolworths will be working together and footing the bill for the
Or it might be another company setting it up and we're approaching for a contract with Woolworths and a contract for Pick and Pay. To say, listen, give me your packaging, give me your... Because you all know, if you can buy something you buy at Woolworths and Pick and Pay, it's the same supplier. It's just different packaging.
Exactly.
So you can do the exact same.
There's a couple of like, I was at a cucumber farmer the other day and he explained to me the difference between a Checkers cucumber and a Woolworths cucumber. And it was quite fascinating. Well, it's exactly the same product, but you pay R3 more just because it's got less of a bend.
Yes. So it's optimized for the customer needs. So that's the only way we can get a farmers directly in.
But that data must be available.
No, it's not.
They're just not giving it to you.
No, it's not available because
how does Woolworths know that their clients prefer a cucumber with, if you put it down with the bend like, so you've got a gap at the bottom, it's 1.5 centimeters or less, and Checkers is 2.5 centimeters.
So that data is available, but a data to say in this area, this square kilometer, what's the demand for cucumbers? What's the demand for tomatoes this day of the year? That still needs to be developed because that if you link back to your supply chain, so you can minimize your wastage.
I do think they will have something like that because how do they buy? They can't just go and buy because buying.
Talk to one of the biggest things that Woolworths, those guys have, everyone, not just Woolworths, is missed sales opportunities. So a person would walk into Woolworths looking for a cucumber. There's no cucumbers on the shelf because the supply chain failed. They're losing millions for that. So they've battled the same issue. So that's the thing. Another thing that's happening also, big data is a massive thing we're doing in my industry. So like one of my former colleagues, they're on a stockbroker, a high-end stockbroker. They do analysis for fund managers. So this is, people find it a bit scary, but they don't just analyze the company based on financial statements now. They are collecting data. So they've got agreements with, let's say, Tracker company. They will look at a shopping mall, let's say Tiger Valley up the road, right? They will map the cars going to Tiger Valley from which streets in Durbanville. Then based on the house valuation, which is public knowledge, they can have an idea what's the spending power going through the mall. So they model the spending power to Tiger Valley based on people coming and going, or on the cars driving where it's coming from. And then they can start linking that now to what's the shops in Tiger Valley. Now you duplicate it with all the ShopRites, all the Woolworths across the country, mapping a data, so they've got an idea what's the spending power entered to it. So now that's step one. Now they've got computer program or machines scanning the internet, looking for Checker specials, looking for all kind of specials, pulling that data, wrapping it in. Then they also look at what's the profit Rainbow make, what's the Rainbow financials, linking it in to model what's the return profile of a ShopRite to the Woolworths. So that's the data that's becoming available. Now we want to go one step further. Can we see what's consumer paying on a daily basis for people? That's coming.
And you give access to that by clicking I accept terms and conditions.
All of you. But a lot of stuff is even you don't accept. Because like if your phone years now.
Yeah, everything's tracked. We are being tracked.
Correct. But not even willingly. So basically, if you sit here now and I've got let's say a Wi-Fi scanner, I can, based on the strength of the signal, I can probably build an outline of you sitting here. Because I can see a signal going strong here, if I move the signals weaker, so I can see something here. And more signals I have, I can run like a Wi-Fi radar, and I can start mapping it. Now you can start linking, if you walk into a shop, use just a Wi-Fi signal of this phone, I can map you walk around. So if you walk into Tiger Valley, for example, it picks you up there, and then it looks which shops you went to. And then you can, if you stand still on a specific shelf, people see you spend more time with interest, what was in the shelf.
And those things are in the shops?
It's in the shops, yeah. But once again, because you're not keeping, you don't need to give permission for this because it's a signal you sent.
Yes.
Because like I'm saying, it's available.
Yes.
Now, obviously, with cameras, that kind of things, it's also available.
Fascinating.
Yeah, interesting.
Is there anything like those kind of technologies that has come to you for agriculture? Interesting high-tech things for agriculture?
So we also run a VC fund. So there is quite some interesting things coming through, like a venture capital fund.
Yeah.
So and a private equity fund as well. So some of the interesting things there is like LiDAR.
Yeah.
So that's for like tips of silos, that's ones, but also linking it to drones now. So that's like stuff that we invested in. Not drones, but the LiDAR components that are being made. So we actually one of the global leaders in LiDAR. We're supplying all the world. So that's one
South Africa.
South Africa, yeah. Oh. Specific company we invested in. But also as Agrarius, as our bigger group.
Yes.
So that's the one area that picks up. So that's going on. One guy, I can tell, I'm not sure I can tell much about it, but they've got like a camera now that drives up and down. You put it in a motorbike.
Yeah.
It drives up and down orchards. And it does a scanning of the fruit to give you a harvest estimate, and then it gives you a ripeness estimate. So that's the one that's quite interesting. It's quite a bit more than the other ones we've seen. So that's what's quite interesting that's popping up. And one I think is also going up now is, it's not like new, but it's hydroponics. I think there's been quite a jump in hydroponics availability. So it comes back to my argument as, if you can map where a person's going to be buying, what's going to be buying, you can start growing like a ghost kitchens. You can have like a vertical farm on a roof in Cape Town. So now I'm in my office, I know I'm going to be ordering it. So my tomatoes, I place my order, and as I walk out of my office, there's a package for me in this lobby, and I pick it up. So that's one potential that's going to come through. So
fascinating.
Very, very interesting. Wow.
Yeah, and then people think agriculture is just having a big plot of land somewhere.
Yeah, so I've been on farms here with self-driving tractors, fully self-driving tractors. It's still a human behind it because laws. But it's, why I like that model is on the farm, they've got the tractor with a satellite sensor on top of it.
Yes.
And then points around it, they put sensors as well, like a beacon of silence.
Yeah, the RTK things.
That's exactly, yes.
The John Deere and all these guys.
Like that. So, but the point there is the accuracy increases. So now it's more accurate than a human can drive this thing. So it's like a 2.5 centimeter accuracy, probably going to 1 centimeter accuracy. That means one tractor drives, and you start plowing, but it's linked to the data of the previous season's harvest.
Yes.
So you know, this 5 centimeters with a lower yield. I need to get a bit more fertilizer.
Correct,
but now I give it exactly where it's needed. So I use less fertilizer.
Yes.
So it becomes more efficiency. So now, and then I come through, I plant by a milliput, the one comes by and puts the fertilizer right next to it, so I use less.
Yes.
So that's like the most efficiency that we'll pick up first.
And a new plant is put both down at the same time.
Exactly.
Fertilizer, the seed.
Correct, yeah.
If that particular spot needs 2 grains of fertilizer, it will put that in.
So the density of fertilizer will drop significantly.
Yeah.
Incredible. Okay, well, we have a tradition that we started with our podcast, and that is that we ask the previous person to have a random question for the next person.
They don't know who it is.
They don't know, and we also
from.
don't know who the next person is when we wait. And our previous person that we interviewed was Justin Chadwick. He is the CEO of the Citrus Growers Association. And we asked him this question, and he just came up with an interesting question. And it is really random in this circumstance. It's, what is your favorite fruit and why?
Favorite fruit and why? I'm a bit biased for a project I'm working on, but one of the fruits I like, it's actually 2. It's bananas, because I like it's just easy to eat, it's easy peeler, it's very nutritional, and it's good for energy. I used to know running, so that's one of the ones I like a lot, and it's potential for nutritional value across we do.
Incredible,
That's what I like. But other one I like now is more the modern foods, what we're doing now. So what I'm liking now, it's still brand new, it's not even available yet, it's pomegranates.
Okay.
Yes.
But seedless pomegranates.
Good
Where are you going to get that from?
It's happening now. It's a cultivar registered. It's being promulgated now on a farm in Beketberg. So that's like, so it's like nice and juicy. It's amazing. So it's a nice one, and it's like to explain, there's no pits in it.
Yeah.
So that's
It's a South African thing. Where does it come from?
Sure, I know it's yes and no. There's South Africa involved, Turkey is involved, and some other guys are involved, but the IP sits here.
Good heavens! Now that was a far more interesting answer than we were expecting.
So that's what I like. It's not like this GMO stuff. It's just like
it's like breeding.
that way.
Yeah.
So that's the kind of fruits that I like.
Because we work a lot with those kind of things.
Yes.
So
So we'll definitely go check that one out.
Yeah.
who manages the IP on that thing?
So another guy. Maybe I'll ask them if you want to interview.
Yeah, but that is definitely something we would love to follow.
Yeah, it might be even people that we know.
Yeah.
Yes, because people think of potatoes. This is not potatoes. There's a tip potatoes. There's hundreds. We can bring more of those things into our community, because nutritional value will increase. because you get a more diversified.
Yes.
That's the kind of things. That's what kind of stuff I'm interested in.
Interesting, and we spoke about Woolworths earlier, and they do that. My family are big potato eaters. I think there's a very strong Irish gene there. So
Yes.
we potato eaters.
But
and there are all kinds of
the public needs to become aware of this because
so. But you go and you see the different types of potatoes available.
Yes.
Whereas that diversification and that range of choice is not available at other supermarkets. So they are very good at that, and that's definitely something that can be expanded.
So interesting about potato. So we all know about the French Revolution.
Yeah.
Now, if you look at history, civil strife happens because of lack of food.
Yes.
That's the main reason. So
Yes.
right now we are, if you look at history, we 1950s environment now. There's a high risk of a global war breaking out. It's the exact same scenarios. The reason for the French Revolution happening in France is because the French were still biased towards wheat, whereas Belgium and other countries had moved over to potatoes. So if you think of the warfare in that era, if there's warfare happening, it's large battlefields, so your crop gets destroyed. So it's easy to burn a wheat field. It's hard to burn a potato field. So if the French had moved over to potatoes as a staple, as one of the staples, the chance of French Revolution happening was less. So the chance that the French Revolution would set off the American Revolution and our modern world would not have happened if they used potatoes. So that's like a small rural agricultural place.
Fascinating. So, but thank you very, very much for your time. I think we can sit here the whole day, but I think we should wrap it up. Is there anything else you wanted to add?
No, just thanks for the opportunity.
Thank you very much.
Thank you, Werner.